Go back to the coverage of our crisis in Ukraine and the ripple effects it's having everywhere. Russia's invasion of that country has created a roller coaster-like ride on Wall Street, lifted the price of oil to an 11-year high, of course, causing gas prices to go up to levels we haven't seen in a while.
Absolutely, and all of this uncertainty has also created a volatile market for mortgage rates in the U.S., but it's not all bad news.
That's right. For example, if you bought a $524,000 house in mid-February with 20% down, you would pay about $5,400 upfront in fees for the mortgage rate, and your monthly payment would be this, $1,970. Okay, fast forward a couple weeks. You would not pay the upfront fees and still have the same monthly payment 2 weeks later, or pay the upfront fee of $5,400 and your payment would go down by $90 per month. So what's going on here? Let's find out.
Yes, we're joined now to make sense of the market is CEO Catalyst of Mortgage, Brandon. Pronounce his last name
Haefele.
for me. Haefele. All right. Hi,
us.
Brandon. Good morning. Thanks so much for being here. So prior to the crisis in Ukraine, housing experts believe the Fed's increase on interest rates would be set in stone. But why is that changing now, and how is this invasion impacting the situation?
Well, really, with geopolitical concerns going on throughout the globe, we're seeing investors really flock to safe haven assets. And so really, like Ty was saying a couple weeks ago, for a 3.625 30-year fix, let's say the cost was 1.5 points. We've really seen that market where even last week it go all the way down to where there'd be a 0-point cost, or even lower on the interest rate, like Ty was saying, to get a lower monthly payment. So really, with this type of uncertainty, investors are actually going to mortgage-backed securities, and what that's doing is lowering interest rates and actually the cost for consumers.
And again, this was kind of unforeseen because what's happening in Ukraine is pretty new, all things considered. So rates are changing by the week, as we've just pointed out. How long do you see this kind of volatility in the mortgage market lasting?
Well, really, Ty, we're going to actually see this probably for quite some time as this geopolitical stuff continues to go on. But it's really important that if you're in the process of trying to get pre-approved for a home, to know that the costs for a mortgage are changing daily, but also interest rates. So if you were pre-approved 2, 3, 4, maybe even 5 weeks ago, the interest rate that you were thinking you might be getting might be different, or the costs. So it's really important as we're going through this tumultuous time to make sure that you're in constant contact with the mortgage company you're working with to make sure your pre-approval is valid and that your pre-approval purchase price might not have changed.
So what's some other advice for folks looking to purchase a home right now?
Really, right now, I'd say is get pre-approved up front. Make sure you're doing a full, what we call TBD approval, where you're actually getting your credit, income, assets signed off by an underwriter. So then that way you can really compete same as cash. Sacramento is still one of the most affordable housing markets really in the country, where 40% of households actually could still buy in this region. So to be competitive, you have to kind of think outside the box, but really pay attention to what the mortgage market is doing in rates. And one easy way to do that is the 10-year Treasury yield. The higher the 10-year yield, the higher the rates. The lower the yield, the lower the rates. So as a consumer, you can kind of watch that and see where rates are headed.
But again, you got to find an expert to back you up if all this stuff is kind of too far into the weeds. And we're talking a lot about inflation too, Brandon. How can buying a home actually protect your finances from the effects of inflation?
Well, that's a great point, Ty. With interest rates, going up, with inflation high, when you have a fixed payment, a 30-year fixed, it's locked. So even if the dollar loses value or things change in the economy, your monthly payment is fixed. And especially in our region, rent prices are going up. So if you're actually going to get into the market to buy, with rates being where they're at, you can have that low fixed payment. You don't have to worry with rents going up and other costs as well.
A lot of good information. Thanks so much, Brandon Haefele, with CEO of Catalyst Mortgage, joining us this morning with a lot of good information in this ever-changing market, in this ever-changing time.
So much volatility. Brandon, thank you.